And just before that commercial, we heard Kelly hoping for a single-digit inflation. I wonder where that is, somewhere in the clouds, at least when it comes to Nigeria. But anyways, let's see what Kelvin Emmanuel is now the director of Obsidian Achina Nigeria. Kelvin, it's good to have you, and good to have you with a different title. I must say congratulations to you.
Thank you so much. Good morning. Thank you so much. Good morning. So from Abuja.
Yeah, all the way from Abuja. So I don't know, I believe you heard that report, and you saw Kelly hoping for a single-digit inflation. Do you see that anywhere close in the horizon anytime soon in Nigeria?
I don't. The government, the Nigerian government, said they have a target of 9% inflation, 6 or 9% inflation. I don't see how that is going to happen anytime soon. Considering that the inflation you have today in Nigeria is both a supply side and cost push basis. You have a situation, for example, where there's so much cash pursuing too few goods, and you also have a situation where the fiscals are not rising up to the occasion. You look at the food prices, for example, you see that all the mechanics that goes into the cost of food, like the price of diesel for tractors, for land opening, the fact that a lot of agriculture in Nigeria is mechanized, insecurity in the northeast and northwest, the prices of fertilizer that has gone up from about 7,000 naira to about nearly 40,000 naira per bag within the space of the last 30 years, which was not helped by the situation you have in Eastern Europe, but which mostly is because of the lack of foresight from the government. The Minister of Agriculture, I always say, has not shown any plan on how he wants to address the issue of backward integration for components like potash and phosphorus for blending fertilizer in Nigeria, which is a major input for food production. You also have the fact that the Ministry of Agriculture is not addressing the issue of seed variety and the research into the production of seed varieties that actually give you higher yield. For example, the local seed variety for maize does about 1.9 to 2.4 metric tons per hectare. The hybrid seed variety does about 7 metric tons per hectare. But the hybrid seed variety is actually more expensive than local ones because they are mostly imported. They're subject to inflation from the FX markets. You can see the black market premium, difference between the NAFEM rate and the black market rate, which is held by the fact that, number one, CBN has only sorted out about $6.8 billion in outstanding forwards. And you have like a limitation in terms of liquidity that they have access to be able to stabilize the markets. Right now, it's a seller's market, and they are practically taking advantage of the speculation in that market. So that's affected the supply chain because Nigeria's supply chain is exposed. And the more the FX goes up, the more, for example, FMCGs have like a 300 naira markup on the black market rate. So, for example, the black market rate today is 1,330. They have a 300 naira markup to 1,630 naira. That's the rate at which their procurement departments mark up the exchange rate, and that's the rate at which they pass on the price to consumers. And the more it keeps sliding, the more they keep marking up, so that they don't fall victims to a shortfall in the rate and losses from FX differentials. You also have the issues of companies not being able to repatriate and affecting their supply chain and deciding if they want to continue to do business or not. Companies not being able to open LCs to sort out payments to foreign trading partners, and then they have to go to the black market to procure dollars. So these are all the reasons why you have headline inflation at 28.9%. Food inflation at 33.9%, and you have a situation whereby if the central bank says they want to, raise the MPR to between 4% or 400 basis points at about 24.9 or 25%, and to ensure that there's monetary tightening to slow down inflation a little, you're going to see that commercial lending rate, when you add all the documentation and discovery fee and the commercial interest rates to the bank lending rates, you're going to see it go up to anywhere between 38 and 40%, which will increase the non-performing loan ratios of Nigerian banks,
all right, Calvin,
which is currently anywhere around 7.5 to 7.8%.
So, Calvin, when we look at these factors you've noted, and then, of course, we've heard the target and the new policy or target of the central bank, which is to deal with inflation target, and then we look at the budget, do you think there's a need to adjust the benchmark, of the Naira in the budget for a more realistic budget implementation?
Well, you see, if you look at the coordination between the monetary and fiscal authorities, the Monetary Policy Technical Committee, Monetary Policy Implementation Committee, and then you look at the fiscal authorities, you look at the Minister of Finance, the Minister of Petroleum Resources. I must commend Wale Edun. Wale Edun is trying, working with the Presidential Committee on Fiscal Reforms on seeing how you can raise the revenue to GDP ratio. I hear that when they announce the new figures for tax to GDP, it's going to be the highest Nigeria has ever seen so far until now. I commend them for doing that. I will encourage them to adopt the recommendations of Taiwo Oyedele's committee on, number one, harmonizing taxes across federating units. For example, I'll tell you, Rivers State has 91 different taxes and levies, 91 that businesses pay in Rivers State. I think Ogun State has anywhere around 42 or 43, if I'm not mistaken, taxes that businesses pay. You can't have a situation like that. You need to harmonize it and reduce it to the 10 that has been stated, and bring in integrate the informal sector into the formal economy, and ensure that these 10 taxes and levies across federating units are the only taxes that are collected. They also need to suck in all the 62 MDAs into FIRS. I keep saying it. MPA, for example, and all the other revenue-generating MDAs, they don't have any business collecting revenues on behalf of the government. Customs, Nigerian Customs Service does not have any business collecting revenue on behalf of the Nigerian government. Nigerian Customs Service is supposed to be for trade facilitation, and they should be under the Ministry of Industry, Trade and Investment, not Ministry of Finance. FIRS should be the one and final bus stop for all collections of taxes on behalf of the government of Nigeria, So if you want to, increase the amount of money that is funded from revenue and draw down the debt and raise the sinking fund to be able to pay recurrent, debt servicing and principal on existing debt, and you have currently interest on GDP for debt anywhere at about 6.8%, if I'm not mistaken. If you want to do that so that you'll be able to, have more money to spend on these important areas that has the ability to, move the fiscals forward and improve budget implementation, you need to pivot back from a fiscal strategy structure in that budget paper that relies on debt as a means of funding the budget. And you see, apart from private sector and public sector CRR, if you look at private sector CRR, you see that it went up from 15% to 32.5% within the last 8 years. And public sector CRR, which the government takes at 0%, apart from that, quantitative easing, which is basically like printing money you don't have assets and reserves to back, has contributed to the fall of the Naira over the last 8 years. Now, the fact that Wale Edun has announced that the government is going to comply with Section 38 of CBN Act of 2007 and stop exceeding that 15% limit, which was already amended in May of 2023, is a positive development. I would encourage them to see how they can ensure that they pivot the fiscal strategy, even if the revaluation losses from FX is ballooning the external and internal debt that the Nigerian government has. But I would say so far, he is making gradual progress. Even if the progress is not as fast as we expected to catch up with the fact that inflation is growing and population is growing at 3% per annum and GDP growth rate is below population growth, which is a signal after 4 consecutive quarters that you're going into a technical recession.
Well, we don't want to hear that word come. We don't want to hear recession. Now, very briefly, less than a minute, what do you think should be the realistic exchange rate at this time in the country?
I think fair value is anywhere around 900 to 960. That's fair value. Unfortunately, it's a seller's market, so the government can't determine what the exchange rate is.
Okay, but
and
that's
also,
about what,
I must mention to you that
in the official market, NAFEM, I think, we have about 900 at this time. Yeah. Yes.
For example, the loan that they collected from the Afrexim Project Gazelle that was supposed to, make some dent in the FX market. I'm very disappointed with the way that loan was structured. I don't think it's in the benefit of Nigerians. Resource-backed loans are not in the benefit of Nigerians. If you look at the term sheet, you see that the loan it's not to the benefit of Nigerians, since I don't have much time to go into the details of that. But a fair value for exchange rate is around 900 to 960 and is a seller's market. Okay.
Thank you so much, Kelvin, Director of CDN Achena, Nigeria. Thank you for your time this morning.
Thank you so much for having me.
All right, great. So just before I hand over to Ayo and the team, let's do a little bit of the market, a recap of the market yesterday. I'm always happy to report the market these days because the NGX is on fire. Last week, we had 13.84% increase on the all share index. The equity cap was up about the same percent, 13.85. Volume was up 139.2%. The value up more than 15%. We had about 7,000 to 9,000 deals. This market is on fire. I think we started the week in its 70s, and then we closed in 94,534.18. So if you have any investment in the NGX, by last week alone, you have made more than 10% of your investment. So wouldn't you rather bank with us, as some banks said there? Let's look at the top gainers, top trades for the week. We had Fidelity Bank, FCMB, and Sterling Holdings. The banking counter, this is why they're my favorite, the most liquid, will easily go up and easily come down, easy to enter and easy to get out, as we see. And then look at the top losers, or the sectors. Of course, there you have the banking right there. It was the most attractive, more than 10% of consumers good, industrial, and insurance creeping in on us. The penny stocks are also walking in, and we saw a lot of insurance. Oil and gas also moved last week, after that news releasing those outlets that will be patronizing the Dangote petrol from next week. So outlook for this week, there's the FGN bond issuance calendar, there's the T-bills expected to climb higher, there's the bonds market also, and of course, more fire from the equities market. That's what we'll be looking out for. So I'll hand over back to Ayo, Mokpe, and Nelta. Back to you.